So, what if the biggest financial event in modern history just happened, and it wasn't an accident? Look, we're not talking about some routine market dip here. We're talking about a shockwave, a statistical impossibility that just vaporized a mind-boggling amount of wealth across the globe. We need to dig into this, because the real question isn't just what happened, but was this whole thing by design?
$15 trillion. Just let that number sink in for a second. That is literally half the entire GDP of the United States. Just gone. Wiped clean from the gold, silver, and crypto markets in a single weekend. You know, this isn't just a number on a spreadsheet. This is a crater that's been blasted into the global financial system.
Now here's where it gets truly wild. The source material calls this a sigma 10 event. So what does that mean? Well, in the world of statistics, that's a deviation so extreme, so far off the charts that is considered mathematically impossible. We're talking about something that, according to all the models, shouldn't happen even once in the entire lifespan of the universe. And yet, here we are. It just happened. And that right there is our first major clue that we've left the world of normal market behavior far, far behind.
Okay, so when the impossible happens, you have to start asking different questions, right? Was this just some random, chaotic market panic, a true black swan event? Or was there a hidden hand guiding things? This is where we pivot from just being shocked by the numbers to actually investigating what went on behind the curtain.
You know, the truth is so often hidden behind the numbers. On the surface, sure, it looks like panic. It looks like a virus of fear spreading from one market to the next. But when you start to look closer, a pattern starts to emerge. You see a sequence of events that feel a little too convenient, a little too perfectly timed to just be a coincidence. Let's walk through that sequence right now.
And this timeline really lays out the pattern. First, you get the setup. The CME raises margin requirements for silver. Now, in simple terms, that makes it way more expensive and risky for anyone betting the price will go up. Then, boom, the crash happens. And what's really worth noting is who benefited. At the absolute bottom of the market, data shows JP Morgan closed out a massive short position. That's a huge bet that the price would fall. An absolutely perfect exit. Then, just as the fire in precious metals is burning, the chaos is suddenly pointed towards crypto. And the whole time, what's on the news? Anything and everything but this financial carnage. Coincidence or a playbook?
All right, now we get to what might be the most counterintuitive, the most backward part of this entire story. Because while the financial markets, the paper markets, were screaming that assets like silver were worthless, the real, physical world was telling a completely opposite story.
So this is the crucial disconnect right here. On one side, you have the paper price on exchanges like COMEX, and it's in an absolute freefall. But on the other side, the demand for actual physical silver bars you can hold in your hand is so insane that buyers in Shanghai were paying a 43% premium just to get it. The people who own the real stuff, they aren't selling. This tells you it wasn't a crisis in the value of the asset itself, but a crisis in the paper mechanism that's supposed to price it. By the way, if you think our analysis is good, please like, share, and subscribe to us. It really helps us keep digging into what's really going on so you won't miss the exciting follow-ups.
So let's zoom out for a minute. An event this big, this disconnected from reality, it doesn't happen in a vacuum. We have to start asking if this wasn't just a raid on a few markets, but maybe a symptom of a much deeper sickness running through the entire global financial system.
I mean, just look at the world this all happened in. The first U.S. bank fails in months. Geopolitical tensions are spiking with warships moving toward Iran. All of this is happening at the exact same time. Are these all just separate, isolated incidents? Or are we maybe seeing the first tremors of a much larger earthquake, where all these different fault lines are starting to crack at once?
This quote from the source material just cuts right to the heart of the whole argument, doesn't it? The perspective here is that we didn't just see a market working itself out, no matter how brutal it was. No, we witnessed a targeted attack, a deliberate, planned raid designed to wipe out anyone with too much leverage, letting the big institutions reset their books and transfer a truly staggering amount of wealth, all under the perfect cover of chaos.
So this all brings us to the most important question of all. What happens next? What happens Monday? Because the events of this weekend have basically pushed the entire market to a giant fork in the road. And one path, it leads to a full-blown systemic crisis. The other, and this is the counterintuitive part, could lead to one of the most violent rebound rallies we have ever seen.
Okay, let's break down these two possibilities. The bearish case is pretty straightforward.
Contagion. The fire that started in crypto jumps to the stock market, maybe another bank gets in trouble, and then everybody just sells everything to get their hands on cash. But the bullish case, the overlooked opportunity here, is that the raid already accomplished its mission. All the over-leveraged players have been flushed out. The big guys who were short have now covered their bets, and with all the forced sellers gone, the runway is clear for an absolutely explosive move to the upside.
So how do we know which way we're headed? Here are the key signals you need to watch like a hawk over the next 24 hours. First, the Shanghai market open. That's going to tell us if that huge demand for physical assets is still there. Bitcoin's price is basically our real-time canary in the coal mine for risk. And of course, any major headlines about Iran or rumors of more bank trouble could be the spark that sends us down one path or the other.
And that leaves us right here with the ultimate question. Did we just witness a controlled demolition? A brutal but maybe necessary reset designed to clear out the rot and pave the way for the next big run-up? Or did the planners lose control? Did they accidentally kick over the first domino in a full-scale system-wide collapse? The truth starts to come out the second those markets open.